Hello, Igor. Nice to see you again. It's the first time for us when we're doing this webinar in the format of Fintech. So if anyone from the watchers and viewers will have questions or you think that something is not going as it should has to go, just give us an excuse because it's the first time doing here. Anytime. Anyways, we just choose the very, on our mind, an interesting topic, a topic that needs to be developed, a topic that needs to be presented in details. This is stablecoin on-ramp, off-ramp, rebuilding cross-border payments, the compliance, legal and product side will be presented and discussed today by me, Dumitru, Condrea, founder for NOVAFIN and co-founder for Fintech. Igor will take also the product and technical side after I will finish my presentation. Each presentation will be something between 35, 40, 45 minutes. Of course, you can ask questions in YouTube directly, and we will see those questions, and we'll try to cover those questions directly here. And at the end, we'll have a session of Q&A, so we'll try to respond during that session. So let's start with my side, with the compliance side, with legal and product side. And first is we have to understand that this webinar is designed for different kind of people and targets. First of all, is designed for banks, well-established financial institutions that want to add a crypto layer, want to start a new business stream regarding crypto. Because for this kind of customers, for this kind of institutions and companies, the path is totally different, even if it's similar, but it's in the same time different from other kind of people or companies who want to build this. A second target of this specific webinar is for new players with crypto expertise starting from scratch. Maybe you have some experience in crypto, maybe you worked into a crypto company or a crypto exchange company, and you think you understand and you think you have sufficient expertise to run this. And for those who are working in such kind of companies or institutions that are running product, compliance side, legal teams inside, and you just want to hear some visions and overview from some other sources like me and Igor. Let's return back to the players on the market. So at least my presentation today and what I will say, it will be linked to two types of players. Established companies like banks with fiat license, with already established compliance team, with already established ML officer or several ML officers, depends, with maybe even with tech team, banking relationships, with leverage across different networks and leverage across different parts of the businesses. And what you're missing is a crypto layer. The second player is those who are, as already mentioned, want to start this business. They have crypto knowledge, they have product idea, they have motivation, they have money. Without money, I mean, everybody knows that to run a business without money is quite hard. So yeah, but sure, there's a budget side somewhere. What you're missing is the entity, what you're missing is the license, there's a banking, everything else, like understanding how it has to be done, how to implement. Both paths absolutely have the same components, but the assembly and the order of assembly of those parts are a little bit different, and they have nuances, they have shades and different shades and different approaches. So let's start with those who, it doesn't matter if you're established player or you are a new player on the market, both cases you need a budget. What is good and what's bad here? If you're already a financial institution, it exists a big possibility that you already have the budget somewhere approved. The budget was approved somewhere on the board meeting, the budget was approved and discussed inside of different teams, and you know basically how much you have to spend on this. With new players, you by sure understand that you need to invest money. By sure, it's not 50K. I just put this number 50K just just a number to show you that you need much more money. Sometimes I know some cases in the market when people start with 150K. It was a small project. They run some pieces of puzzles to create some full picture, but they did this. But mostly, and most of the times, it's not just 150K. I don't speak about marketing. I don't speak about promotion of your product, because this is a second part of your product, which we will not cover here. Maybe we'll make some tangencies here on this topic, but mostly we'll discuss about implementation. Mostly we will discuss about how to start this and how to do this. Doesn't matter, established company or just a new player, you need first to run a company. You need a license. You can have a product inside, or maybe even just a product already technically ready. You can have a product vision. You can have a team. You can have everything. But without an entity, which is crucial here, you cannot start. So first step is to go and register an entity. You have to choose wisely the geolocation of this entity. Before going and choosing the geolocation, you have to understand what that specific location will cover, what kind of legislation will be applied, and what kind of things you'll have to implement, to do, what kind of compliance you'll have to cover. Geolocation is very, very important thing here. There is, in European Union, you have also possibility to open such kind of companies. And even if across European Union exists this MiCA compliance or MiCA regulations, which by the way, it's not just a paper that you can hang over the wall and say this, like with bold written MiCA, and this is a license. No, you have to be MiCA compliant. MiCA compliant is the same thing as GDPR compliant. It's the same thing like European AI Act compliant. So you just have a set of rules you have to implement. Of course, exists a regulatory body that will look at this. Of course, exists controlling mechanisms from the government and from the market itself that will check this checklists. Because you have also to understand that one thing is you will have the license, or you'll have be MiCA compliant in European Union, for example. You will have, I mean, let's use a general term, like you'll be compliant and you have a license. And another thing is when you go to acquirers, where you go to vendors or partners with whom you want to collaborate, because they will request quite a lot of things from you. They'll request different documentations, different policies. They'll request a huge amount of documents. And if for example, for your government, for the government of from the jurisdiction you choose, the set of documents you prepared and sent to them will be okay, doesn't mean it will be sufficient for your partners or for your acquirers. So we have here several instruments or several players on the market who will help you to fulfill that checklist, because otherwise you'll not be able to operate. You'll not be operable at all. You'll just be in all the time in the stage, like preparing, sending the docs. And to be very honest, this is quite frustrating when you think you have a full documentation package and you think I can start now. You go, for example, with the government say, yes, good. Then you go to an acquirer said, no, this is not sufficient. You have to A, B, C, D. And for example, you start to negotiate with them like, hey, I mean, why I need to implement this rule or another rule, for example, I don't know, a specific type of segregated account. We'll discuss it later. This is not, I mean, this is not a request from government. They'll say, yes, we understand it's not a request from government, but it's a request from our side because, and you'll see quite a lot of argumentations why. And you'll have to choose, I mean, or you want to work with that acquirer and to adapt and to adapt your policies and your business reality under their request or not. And before you start, doesn't matter you're established player or you're just a new one, doesn't matter. You have to go first and discuss with those vendors or those companies with whom you're building this partnership, because it's very, very unique cases on the market when you, alone, by yourself, will build an entire product, so the entire chain will be controlled by you. Of course, exist big players on the market that can do this, but even they not all the time are building such kind of things. Like an example, Revolut just launched European-backed stablecoin called Euro-R, if I'm pronouncing it correctly. and they built this together with Bridge. Bridge is a subsidiary of Stripe. So even Revolut, with their amount of money, capacities, and abilities, they just go in collaboration with someone. So before building such kind of a product, and this is not only for crypto, this is a general advice, go and speak with those vendor in upfront, and just ask, like, hey, generally, what kind of questions you will have, what kind of questions you'll have, what kind of documents I have to send, things that I have to cover, and this will be, they'll give a lot of information here. There are two paths, and we will try to cover both of the paths in parallel. So if when we speak about entity, you select a jurisdiction. In European Union, we have MiCA compliance, and you can select, theoretically, you can select any country from European Union. But the difference is that each European Union country has its sovereignty, and that sovereignty is above the European Union legislation. Just we have to keep in mind the fact that each country, part of European Union, is with separate legislation. Of course, they have a mandate to adapt their legislation to European Union recommendations. Of course, they have to comply with some of the rules, but there exists sovereignty of each country, and each country apply this sovereignty on their own will and rules in different side of legislation, inclusively in crypto trading, inclusively in crypto layers businesses for existing financial institutions. You can see, for those who are working in European Union in fiat businesses, classical fiat businesses, you'll see that exist, for example, in one jurisdiction there is one set of rules, in another jurisdiction there's another set of rules for licensing, for MEI, for example. They are similar, but they can be different in details. The same here. Existing European Union countries that still till today there is no clear understanding what regulatory body is responsible for crypto trading. And I'm not joking, exist such kind of countries. Exist countries like, for example, Czech Republic, that are very, very strict, and they provided very clean and very clear instructions how to do this and how to manage a MiCA established company. So they gave, I will be very honest with you, they're not the only one, but I like the Czech example the most. They just gave a very clean and strict and very understandable instructions how to pass from VASP licensing, before MiCA it was VASP, to MiCA. And they gave very clean timelines and so on. Lithuania did the same. Other countries also did the same. Malta, Cyprus, also they came with quite clean instructions. But Czech Republic is the case where I saw it with my eyes. It was absolutely clean and lean transition, and they just provide all the information you needed. When you go in North America, you can find such type of companies like MSB, money service businesses. For example, Canada currently is very popular among different crypto companies as a jurisdiction for opening and receiving a license there and to build entities there. MSB in Canada will give you a lot of opportunities, but and they, by the way, are very simple in registration process. They have only two regulatory bodies. It's FINTRAC and it's Bank of Canada. With FINTRAC, it's sufficient to work under FINTRAC for some of crypto licensing or crypto activities. But in the most cases, you will need RPAA, Retail Payment Activity Act from Bank of Canada, which is also, by the way, very simple to apply. You just have to fulfill all that documentation to apply and to wait for a response. Unfortunately, they're responding quite slow, but when you receive a response, you receive a full picture of what needs to be done, and they give you a lot of instructions. Canada is a very good location for opening crypto company, a company that works with crypto, or a subsidiary that will take care about crypto. It's not the best. It's not better than European Union MiCA. It depends on what kind of customers you want to work with. Because if your accent and your market is European Union mostly, I will strongly recommend to go into European Union jurisdiction. Anyways, in case if you have questions, you need specific advice on specific cases, what kind of country you think is needed or is better suitable for your product, just ping us, me or Igor, and we'll be happy to help you, to provide some consultancy here and to help you to choose the best location. Canada is also a very good location. I know that some people started to look for Argentina. Unfortunately, currently, for those who are looking for Argentina, for South America, are in a shady side of this business. But Argentina is open market, so you can try and you can test some of the things there. It's cheaper than in Canada, but still requires quite a lot of attention. And in the most cases, if you'll work also with European Union customers, I will strongly recommend not to go there, but to work specifically in European Union. Anyways, doesn't matter. You choose a location, you choose a jurisdiction, you read the legislation, you found people, or maybe you already have inside of inside of your team, you have compliance officers, you have legals, and you can build it. If you're an established bank or established financial institution, and for example, you have electronic money institution license in one of European Union country or in Europe, continental Europe, it doesn't give you the full possibility to work under that license with crypto. You still need to cover other licensing, like to be MiCA compliant. Well, if you're an MEI, already established MEI, MiCA, it's peanuts for you because you already fulfilled a lot of things there, and you can use the team for the compliance team you can use here. You can use your legal team also for MiCA. Technical side is very simple to comply. Technical compliance side is also very simple to apply here. So it will be easier, but you still need to go for a new licensing process. And when you are running your own entity with licensing, it gives a leverage, gives a full control of at least at the part of a product. But if you, for example, have a limited budget, you want to start this project, you want to test the market, it's also an option to go and to work under someone's umbrella. It means maybe you have someone in the network, in your networking, you have someone who is ready to give this umbrella. You discuss the different commercial sides of here and the rates and fees and so on, and you can start under someone's umbrella. Open this kind of activity under someone's umbrella means that you don't have any kind of control. Let's be very honest. Even if they promise you to give access to bank accounts or to whatever, you have to be very cautious here because exists compliance side. They have to cover a lot of things on their side, and you don't have the control. It's just an illusion of control. But it's very fast. It's very cheap. You can test some of the things on the market, and maybe it will be just a first step, an incremental step. Then after some months or years of working under such umbrella, you'll be ready to move to your own licensing. And you have to take in consideration that licensing, it's not an easy process. It takes months and months, sometimes 6 months, sometimes even a year, depending on your resources, depending on the team, depending on a lot of things around. And you have to take in consideration the fact that opening a new license takes time. If you already established bank or established financial institution like MEI, it's shorter, only because you already have a team, you have clean understanding of what you have to do. The work is very lean done, and you just wait for approval from your regulator, and that's it. And yeah, approval time can take some months. In some jurisdictions, honestly, it can take up to 6 months, up to 8 months, depends on the capacity of that regulator to work. When you establish bank, you have the board approved your market, your budget, sorry. Compliance maps existing, rules against on-ramp or front needs. So you just need to take, as I mentioned, to take everything and to put under not a new shell or under new layers. A lot of KAB, KAC procedures that you already exist in place you can use it here too. But what you don't have, you don't have KAT, know your transaction. So on-chain screening does not exist here, absolutely. So you'll need to implement this. You'll need to learn how to work with KAT. KAC, KAB here, most of the times is identical for fiat as is identical for crypto. Why? It's because there are general rules for KC and KB for financial companies. Doesn't matter what kind of asset will be run there. It's a fiat asset or it's a crypto asset, the same rules. So if you already have a, I don't know, a provider, KC, KB provider, you can use it. You just onboard that customer as you're onboarding usually. By the way, if you're doing on-ramp, for example, you want to exchange fiat to crypto, you still need to ask your customer to prove that those money that they have on their bank account are legit and source of fund is still requested. Of course, exist different thresholds in different jurisdictions. One thing also to remember when you're choosing a jurisdiction, but after that, you still need to ask your customer for fiat provenance and just to understand where it's coming from. As I mentioned, it seems like I just run with my words. I run in front of the slides. So let's a little bit recapitulate and return back. So the license gap. Again, fiat license, if you're an established company, fiat license is not sufficient. It helps you to get it easier, the MiCA regulations, or to in Canada to be under APA registration. But you need to understand that fiat licensing, or the classical license you have here, it's not an option. And as I already mentioned, everywhere around the world, every jurisdiction has its own variation. They have different notification system, but overall, everywhere exists the same patterns. For example, we'll cover it a little bit later, but for example, regarding policies, you'll still need, in any kind of jurisdiction, you'll still need anti-money laundering policy. You'll still need counter-terrorism fighting policy. And the rules that will apply in those policies are grosso modo worldwide the same. Next. Sometimes it's very easy. We have to remember very specific thing. The biggest part of a job here in licensing is for your compliance team. Compliance team is doing the hardest side. They will prepare the papers. They will prepare the policies. You will need at least 20 policies. At least it can go up to 30 and even more. Depends on your jurisdiction. Depends how much you want to detail them. Depends on the customer profile. Depends what acquirer or a vendor will request from you. The same thing, if you need a full detailed list of policies you need to prepare based on different jurisdiction you want to choose, just ping me and Igor will provide here you with separately with more detailed information. And writing those 20 plus or 30 plus policies means quite a lot of work. So compliance team will do quite a big amount of work, but you still have a legal team. And question comes, what do the legal teams? Oh, they do the less work, or from general perspective, they do less work here, but sometimes exist things in national legislation that are not reflected in compliance legislation or registering regulatory legislation or notes or advices. You have to ask your legal team also to check it from national legislation point of view. It has to be, you have to catch those gaps because sometimes exist these gaps. And okay, I'll be very honest, it's not sometimes, it's usually exists such kind of gaps. You have to understand that sometimes legislation, crypto legislation, for example, crypto regulations are very modern, very competitive, very fresh one, but the national legislation has a gap. It's a little bit behind, or even worse, it's a lot behind. And you need to understand how to work, how to deal with this. Because possibly during this legal check, you will understand that you need to add some additional people on your payroll, people who will do some specific screening or some specific reporting or wherever. And very, very important is that legal team will do, together with a product team, will prepare the terms and conditions for your product. I know, I think I met only several users in my experience who opened terms and conditions and read them in details. Usually people start to read the terms and conditions only when they have some issues or questions. And that's happening only after support team say, hey, this is written in our terms and conditions. You have to prepare with legal team a very heavy, a very strong, and a very well-prepared terms and conditions. Terms and conditions that will cover different kind of cases. Those terms and conditions has to be aligned to the policies, to regulation policies, and aligned to the national legislation. Don't write terms and conditions for only 1 page or 2 page. Don't use AI. I mean, you can use AI for verification. You can use AI for a draft, of course, but make it solid. Because in this case, you have the leverage of a product, you have the leverage on the processes. Describe in terms and conditions, describe the flows, describe who is doing what, how you transfer the data. This is a very important topic, for example, in European Union with GDPR, and not only in European Union, worldwide. When you're building such kind of a product, doesn't matter you're an established company or you want to work under someone's umbrella, exist 4 corners. So basically we have, to be more honest, we have 3 corners and with a layer top. First corner is fiat rails and acquiring. Second rails is liquidity rails or liquidity providers. And third is treasury and accounts. And above this are compliance KYC layer. With fiat rails and acquiring, is very important you to have an acquirer who will do the, for example, in case of on-ramp or even off-ramp, who will do the transaction itself from the card or from bank account to wallet or to liquidity provider and vice versa. An acquirer is very important. Choosing the acquiring is a also very important step. Go and speak with those acquirers. If you have a possibility and capacity to be for yourself the acquirer because you're an established bank or financial institutions, you have Visa, MasterCard principality, you can do it by yourself. In case if you have Visa, MasterCard principality, you just have to go and to speak with Visa and MasterCard about, hey guys, we are running a new side of a new business stream. You have to renegotiate the terms and conditions. You have to renegotiate the rates because there will be a little bit different rates. Just side note, maybe a lot of you knows about this, maybe not, I don't know, but Visa, for example, is more crypto friendly. They're more open to crypto products. So you have to also to think here with whom you are working. If you are not a Visa, if you don't want to use your own fiat rails as an acquiring, you can go and to choose another company as an acquirer. If you're a new player in the market, the same thing, you just have to go and select an acquirer. Acquirer selection is also very important. When you fit and find the jurisdiction where you want to open the company and receive the license, you also have to keep in mind if that acquirer that you want to work or those acquirers you want to work are present in that market. For example, exist companies who are present in Europe, but they have a subsidiary in Canada. And then you can, as a Canadian company, you can onboard those companies. If you, for example, are Canadian MSB and want to onboard to European Union-based acquirer, it can generate some questions and it can be a little bit tricky from regulatory point of view. It's possible, but exist workarounds, but you have to be very cautious here also. And you have to speak with the acquirer if one jurisdiction fits or another jurisdiction fits for the policies. Because maybe even if legislation and regulations permit this, their internal rules will not allow, for example, for European Union-based acquirer to work with a Canadian MSB and vice versa. It depends on situations. Liquidity rails. You found an acquirer, they gave you passed, to be very honest, most of the cases you will play when you will onboard to acquirers, it will be heavier than to send documentation to a governmental body. It will be much faster if you'll receive very prompt feedbacks. They'll help you a lot. Just take all the questions that are coming from compliance team, take as a must, and don't be angry at them. What they are asking sometimes is overruling, yes, over bureaucracy, yes, but it will help you to shape a good product and to be covered and sealed. I will come back later on the topic about being sealed and anti-money laundering procedures and counter-terrorist procedures. So they gave you passed onboarding. They gave you so-called payment page. Yeah, you can build the payment page together with them. A customer can enter his or her card details, and the acquirer will work. I mean, they will take this money, will process, you'll have a mid. What is next is liquidity rails. So now you have to build a bridge between this acquirer and liquidity bridge and the liquidity provider. Liquidity provider, there's a lot of liquidity providers on the market. Acquirers who will work with fiat to crypto rails or crypto to fiat rails are not so many. They're sufficient, but not so many. But liquidity providers are a lot. I mean, you can choose it from a big range. What's important here is you have to have leverage and control of this. I mean, at least you have someone inside of a team who will help you, not a person who will help to cut the corners. Please don't get me wrong. Someone inside who will be your person of contact, the one who will respond to your phone call or message, even after a working shift. I mean, it will help you to at least to have a control. Liquidity provider is very important also to be a very trustable one who has full licensing. You also have to check them. Again, if you need help in checking liquidity providers to give you advices which liquidity provider is good or bad, also can ping me or Igor. We will be happy to advise you. Not advise you like saying, hey, this liquidity provider is a good one. No, we'll give you a full list of liquidity providers we can help you. And with understanding and examples like this is registered here, they do best here, they are not good here, you can work on these workflows. This is the best cases we have in our experience with that liquidity provider or with another. So just feel free to ping us and we'll be happy to provide more information. Treasury and accounts. What covers here in treasury and accounts? You need specifically to have a treasury team. You need to have a segregated customer account or several segregated customer accounts, depends on how you want to build the scheme and the workflow. And opening a bank account. So what means a segregated customer account? Segregated customer account is the account, a classical IBAN account, where your acquirer will send you the settlements. It can be T+1, T+0, or more. So it's the bank account where the money will arrive. From that segregated account, money will move to liquidity provider, or maybe vice versa. They will come from the liquidity provider, and if in case of off-ramp. You have to be very cautious with liquidity providers, with acquirers here also, that on the matter of settlement period, settlement cycles. If you'll find, usually a good trustable settlement acquirer will give you settlements T+0 or T+1 in the worst case. What means T+0, T+1? It means money that we process today will arrive in your segregated account today. T+0, T+1, the money that we made it processed today will arrive tomorrow, usually tomorrow in the first half of the day. For this manipulation or for this settlement cycle, you need to have a reserve, a cash reserve, because you need to provide your customers instant instant full top up of your car, of their card or their wallet. So you will receive from the acquirer a message, true or false. In case of true, you take your own money, your own cash, and go to liquidity provider, make the exchange, and settle your customer. Your settlement will arrive later, on the same day or next day. Exist acquirers who provide settlements T+2. It's already a risky situation because you need 2 days. You have a gap of 2 days between liquidity. Sometimes it's very argumentable why it's happening, and if you're willing to take such risk, feel free. But I would strongly recommend not to work with acquirers that provide T+2 and more for settlements for crypto, because it's very risky. Just imagine everything. It's super simple to explain why. First is the gap of liquidity that you have. Second, everything what processed today will be settled, for example, tomorrow. Today, the company is good and it's well established. Everything works well. Tomorrow, it can be bankrupt. So in case if you are working with T+1, in the worst case, you're at least risking with amounts that were processing the day before. Not a big risk. I mean, comparison. If it's T+2, T+3, and so on, it's a bigger risk. You have to understand this. So treasury accounts, a segregated account has to be established in a very also trustable bank, a trustable financial institution. You can work with a bank, you can work with a financial institution, doesn't matter. The important thing is you have to have the trust. You need to have this trust to that institution. I will strongly recommend to work with established companies that are present on the market, that check the internet, just Google it using AI to make a screening for them, to understand if they are good and trustable or not. And above everything else, I mean, not above, but something that is wrapping up entirely is the compliance and KYC layer. It's a very important thing. KYC, KB, KT has to be the cornerstone of your product, beside the everything else I mentioned. Because fiat rails cannot work, for example, without technical integration. Liquidity rails, the same. Everything works via technical integration. Of course, this product works with technical integration. Without technical implication, you cannot do, it's impossible to do anything. Yes, you can use some white label solution. Again, if you want to work under someone's umbrella, where you just have a limited budget, you're new on the market, you can find an acquirer with whom to partnership, first side of a puzzle. You can find a liquidity provider, second side of a puzzle. You can work with treasury also. I mean, treasury you can open, if you are, for example, established bank, you can open inside of your bank, you can open a segregated customer account. Sometimes some of the regulators can request you to open a segregated bank account into another institution, like a correspondent bank. It's also normal. And even if you are building everything as a puzzle, you don't have a big budget, you want to work under someone's umbrella, yes, you can build this puzzle using different vendors. But again, the compliance is on your side, and you have to be responsible for the compliance. And the compliance gives you the control, at least a part of control, for example, for things that you want to do under someone's umbrella. We covered the thing that fiat rails, in case of fiat rails, in Visa, MasterCard, if you already have a principality, go and speak with Visa, MasterCard about this. If you work with an acquirer, they will tell you, like, we are working with MasterCard, we are working with Visa, and they will provide you advices. Most of the times via the acquirer, what's comfortable here, working with via an acquirer, they'll give you all the instructions from Visa and MasterCard and will help you to cover all these things. Already we discussed about choosing an acquirer, what means T+0, T+1, and what means more, liquidity provider, KC, KB, crypto, fiat. This is a thing that's very important to discuss. If you have, for example, I don't know, some sub, it's pity some sub didn't finance this webinar, and it didn't finance as a sponsor, but let's use the example of SumSub. For example, you use SumSub for KC and KT, and you are, they can help you. You already can use this tool for onboarding customers. But pay attention, at some jurisdiction requires separate instructions and separate rules for people onboarding customers for crypto and onboarding customers for fiat. So you just have to take care about this. Most of the times it's the same. Topic of segregated and not segregated, and segregated accounts if you're a bank and if you're not. Some acquirers, if for example you go for an acquirer, an external acquirer, some acquirers are requesting to have a segregated outside. Some jurisdiction of your jurisdiction, someone will request and a bank account will accept that you have control of the segregated account inside. It's very good when it's inside of your bank, of your financial institution, because you control the full chain, or you at least you have more and more chain, more part of this chain that you are under control. But if you'll have a segregated account for yourself, keep in mind that there applies in some cases applies some new compliance rules that you have to adapt, because it's basically you are supervising yourself, and it's tricky sometimes. And you have to segregate the responsibilities of different members of a team, and you have to assign different members of a team. Possibly for this product and this project, you will have to assign a separate compliance officer or compliance team. So just take care about this. If you're a new player, doesn't matter, small MSB, small European Union, in Hong Kong, European Union company, or in Hong Kong company, wherever, you need a license. If you'll apply for your own license, it will take months and months and months. You can do this if you have money, you have time and patience. It will give you leverage, will give you control, but at least for first part of a job, because you still need acquiring, you still need crypto liquidity provider, you still need other things to be done. You can go call your friend and say, hey, can I work with you under your umbrella? Yes. And what I'll advise in this case is just take a compliance officer. You pay for that compliance officer. You pay for a lot of people that will be in that payroll and control those people, even if they work under another's umbrella. And now let's speak about anti-money laundering and counter terrorist financing. As I mentioned, you need 20-30 policies. You need a lot of rules. You need a lot of things to be implemented, done, and verified, and work. I mean, those rules have to be live and to be implemented, and they have to be respected. Basically, even if it's a nightmare for you, even if it's like, I don't know, you hate compliance, you think that's just over bureaucracy, and I don't know, just you have to understand that even if it looks like this, I'll be very honest, sometimes it is, even if it looks like this, it helps you to be sealed. Your company, your financial institution, the umbrella, the financial institution of your friend under which umbrella you are working, doesn't matter, it has to be sealed, because crypto is used not only by honest people, it's used by less honest people, like fiat. And you have a responsibility of assets and money that enters in your organization and exit from your organization. This is why it's very important to have KAT, I mean, all these on-chain inspection solutions, when you have to track from where is coming that specific asset, USDT, USDC, whatever. You have, of course, layer of responsibility. If, for example, one token passed through one wallet that was flagged, and you are the 10 or 20th in the chain who received this token, okay, it's a different topic. But if you receive directly from a wallet that was flagged by some government bodies, from police or I don't know, FBI or security services from your country or any other country, you have to be very cautious. So even if regulator will not say anything, or just ring the bell, you say, hey, sorry, you can have issues with police and you have issues with law directly. You have to be very, very cautious, because this kind of people, and I'm not speaking about those who are doing, I don't know, gambling activities, because those are the maybe less riskier from what kind of a dark side businesses can arrive to you. You have to take care that not a token will be, or a fiat set will be used in financing terrorism, will be not used by criminal activity. You have to be so much sealed, because in the simplest case, in the best case, you'll just have fines from regulatory or from police. And believe me, some of those fines can be so big that it'll kill your business instantly. And you as an owner, or you as a responsible person, even if you'll work under someone's umbrella, those fines will transfer to you, and you will have the liability and responsibility to cover those fines. And you will have a tracking history, a very negative tracking history. So you as an owner, as a CEO, you have to take care about this, because it's about your security. It's about your side of things. The risk to work with vendors is you don't have the full control. Sometimes you have to balance this. I mean, less control, but more feasible product. You, even if you choose another vendor to work, build a compliance perimeter around this vendor. Build policies that will help you to choose the right vendor. And compliance give you the right to ask not only the customer, but also to ask the vendor what is going to do, what's for those assets, and so on. Here is a list of regulatory map for different kind of jurisdiction: United States, European Union, United Kingdom, Singapore, Hong Kong, wherever. You'll see this slide. You can pause this slide later when we will put this recording online, and you can just use this. Again, feel free to ping us, and we'll provide more details about this. I will strongly recommend not to build a KAC, KAT, KAB from scratch. Just use a service. It will give you less implication. Products, there are super well-established products on the market. You can take it, you can work with them, and they'll be cheaper. What's very important is that beside the fact, and I already mentioned this, beside the fact that you need money to invest into compliance, building technical, building product, building so on, what's very important? The customer comes, press pay, enter the data, press pay. They want to see the money, the assets, or the fiat right in that moment, on the second, to see on their bank account or wallet. So you need to have a reserve of a cash, a liquidity reserve, that you'll cover this till the settlement arrive. So take this also into consideration. At the beginning, you'll need not so much money, but step by step, you'll need this leverage. So take a good treasury and manager who will help you to build here, and you have to have money for this. As I mentioned, as closing, product, of course, is a cornerstone. Product, if it's without product, the company cannot work. And Igor will explain you later why product mixed with technical side, it's an important thing. But compliance is also another cornerstone. It's the layer that covers everything. And if you listen, and you have to, but at the same time, you have to pay attention that compliance, it's not the single one. I just gave you 46 minutes of lesson what means a compliance, but compliance, with only compliance, if you'll take care only about the compliance, the product will not work. If you listen only the product, compliance will not work, and you'll be sealed, and you'll be in bad situations, So you have to find a balance with understanding that the business is the most important thing, means the product is the most important thing, but the compliance has to be the layer, the perimeter, the safeguarding perimeter for your product. Igor?
Thank you, Dima. It was really interesting for me, and I've learned some things. So maybe the question from my side, since we have an ability to ask you questions here, what do you think the biggest issue that you've seen in real life while structuring the on-ramp, off-ramp products?
The biggest issue is that in case of small players, those who just want to start the business, is that they think that, I will cover the compliance side or everything else, I'll cover step by step later. Let me now focus on business because I need a product, I need a technical team, I need vendors, acquirers, which is correct. But compliance has to be all the time in parallel. I saw situations when people build the products. From a technical point of view, they build the products from product point of view, and only in 1-2 months before launching, they say, wait a second, we need to figure out the compliance side because they already have a license. They think that everything is covered. So you need to have a compliance advisory from the beginning, right near you. Just don't pay full-time employee, don't pay her full-time salary, but just take it him or her as a consultant. In the moment when you start onboarding to acquire, you need an FTA, of course. But before this, you need someone who will advise you. And this is the biggest mistake I saw on the market.
Thank you so much. And I may be referencing back to the podcast that we did a while ago. Sometimes regulation and compliance seen as a dragon, and you are as a knight, you're trying to fight. And the best way to actually fight with the dragon is to feed the bad guys. So if your compliance process is catching the cases, fraud detection, AML, the compliance as a team and as a regulator, they will be happy with this process. So thank you for that. And everyone, hello once again. My name is Igor Tomych. Today I will go through product/technical implementation. And it's going to be short because we have 40 minutes. I will run around 30 minutes maybe, and then we can have some questions and discussions. But anyway, what you're going to know after this presentation what I actually need to build, because what I see from experience, sometimes the issue is not the technical capability of the team, but the knowledge, what actually you need to focus on and what is less important things. Dima did really great job explaining the compliance regulations on all the required bits and pieces for starting the business. But today you will leave with the next things like reference for architecture. What are the layers yours? What you're renting? Where the things are going? The failure catalog. Like I will show some cases where I will explain some cases that we faced in reality with the business when they didn't focus on the right things. And I would say build versus buy, because it's a big call. And here it would be understandable what is better to utilize the products and experts on the market and what you can try to build and accumulate as a knowledge inside of the company. So I would say that the problem with the ramp, you are not building actually a ramp, you are building an orchestration layer, because fairly it's complex process. If we compare to usual topping up or withdrawal processes, is much simpler, because usually you have the client, their funds, and then you are basically through the banking rails or other rails, you are getting the funds out of the system or inside of the system. And here on this scheme, you can see that we have pretty complex process. Sometimes the client has an ability to access the on-ramp, off-ramp via mobile applications or web checkouts, and it becoming much more popular as a partner APIs, because everything is becoming API first, and with all AI agents, it's more and more achievable to have integrations with the less time. So the inputs are like that, and the orchestration is really, really important, because when you're trying to get the money, and let's take an example, I would like to on ramp $100 and I would like to buy or convert them as on ramp to some Ethereum. It's actually a pretty complex process, because you need to have the quotation and pricing process. Then you're running through the KYC for those incoming money. You should have a ledger system which allows you to understand what is coming in, what is the process, and step by step understanding where the money is. Then you have the state machine for those orders and executions. And important a bit is reconciliation, because people and teams, they sometimes not focus in that, thinking like we can get it later, but it's much more complex than just adding it on top of existing working product. And the rails, as Dima mentioned, PSP acquiring. Another way to get the money in is usually bank transfers in SEPA. It might be SEPA, SWIFT, any other banking rails that is useful in your region. Another item that I've put here, and we didn't discuss it before, is liquidity provider, because one way is to accumulate the resources and have own liquidity, but there are cases when you're using third parties liquidity providers, and then basically the settlement rails for on-chain and custody, because there is a difference when you are using non-custodial and custodial approach, and we will talk about this today too. So big one. And the main goal for the team to give an understanding that we are properly orchestrating and we're not going through the success cases. We understanding that each step might break and there is a consequences for that. So we need to account them in our building tax system. And what we can do is to understand that those processes as an on-ramp and off-ramp, they're not mirror images. It's not like you getting money in, you getting money out. The process is different, and there are two risks flipped, because when you get in the on-ramp, it's fiat in, assets out, and you take the card or you take in the bank money, which can be reversed, and then you hand over an asset which cannot be reversed. So basically, exposure for the business and technical one is chargebacks and frauds. So the system should be built the way that we're properly doing all the checks necessary to make sure that there is a significantly decreased risk of the chargebacks and frauds. And with off-ramp, we're going vice versa. So we're getting assets in and we're doing fiat out. It means that our lack for push of the money can be failing, but the exposure is source of funds, because that's really important, because we're giving away fiat and all the associated checks should be there. So if we go next, simplified way to say that the ramp has 5 jobs, and that's a whole product. It's quotation, because even if we have technical things right, we need to make sure that the business is generating the margins, which means that our fee mechanism and our quotation should be properly structured according to business ability. So it's a pricing engine with the trading, hold on that price for a definite window, because you cannot do off ramp with indefinite window. You cannot say, okay, now I'm taking $100, and anytime that you top up and we get in those money, it will be properly converted into Ethereum or any other cryptocurrency. Collection, that's an inbound lag to prove, and you need to make sure that it's properly settled. There is no chargebacks or AMLs. The engine for conversion, and it can be executed against own liquidity and the book, or through the liquidity providers. So that's once again really complex and important way. And then the final one, settlement. That's usually 4 steps that the teams are focusing on. But in my experience, you need to focus on accounts, because if you don't have an ability to explain to SANS where the money is right now, then basically it's really hard to go back in time and fix the system, because the information that is stored in the system will not be enough to see what is going on. So that's maybe the crossroad of the fintech teams, because you have engineers, you have a lot of LLMs, which right now helping us to build decent products. But the important things is to know how the financial systems work. And so the account system is really important. And let's dive deep into each step. So first one is quotation. So quote is a risk actually position, not a number. Typical lock is for quotation is around 30 seconds. And every second you hold the price, there are shorts on the market. So the price window will pass it through. And if you can split into 3 different buckets as spread, slippage, and network rails and fees, it's really great, because that gives a visibility for your clients what actually is going on. And basically, the spread, that the margin that you're providing on top of the execution, explicit, versioned, auditable per transaction. That's once again really important for accounting, because if you're generating a specific margin today, and then you changed in a few days forward, then you cannot go back, and if the system doesn't have all the proper information stored as a fees associated with the average transaction, you cannot do properly the accounting and understand the P&L if you just have the cash flow, and then it's really hard to split what is going on. The slippage, that's a gap between quote and filled. Sometimes absorbed, sometimes it's on the client. So it's really the business decision that should be done here. And the network and rail fees, because there is no free process. You need to use the third-party rails. It has the cost. All the things should be properly auditable and variable and quoted late, and the reasons the must stop balancing. So it's really important to understand all those 3 and properly put them in the technical specification. And someone has to be on the other side. There are 3 ways to source. So pre-funded float, that gives an ability for you to do the instant settlement. Your capital parked on both sides. That's the fastest but most expensive flow. There is another way to work with the liquidity just-in-time execution. So trade only when the inbound leg clears. So you are not executing anything until you have the inbound leg cleared from the steps that I explained before. But that's a timing risk, because if you're working with acquiring from cards, yes, you have T0, T1, but still there is element of chargebacks involved. And if we're using the banking rails, it's not instant. It means that the banking account details that you show to your client might be used later or not used at all. So that's another way how to work with the liquidity. And aggregated venues, sometimes it's really a good way to work with the system, but it requires really significant ops complexity, because you route across different providers for depth and failovers, best fills, and hardest. It gives more harder recollection whatever is going on. So we can shift to the case study. And we had a client in European Union which didn't have a proper structure building for the accounts. And that's really, really simple, but still a self-explanatory example. So we had 1,000 euros an incoming transaction, and the customer is getting 9,000 euros as their balance for the conversion. 10%, pretty straightforward. The real bank has 10,000 euros. And then basically we're doing the transaction. And as you can see, there is unexplained gap for 1,000. It means that on our real account, when we did the ledger recording, everything is clear, but there was no fee account structured in the system. So the platform that we were supporting for the client, initially built by other team, they didn't structure the double fee, double entry ledger, and they didn't structure the accounts for fees collection and understanding which operation and which conversion led to the specific operation. And then it's possible to detect whatever's going on, but it takes a lot of time from the ops team and it leads to the problems. So I cannot stress enough how properly structuring the financial system is important. It's not just the matter of writing the code right properly and with the decent quality. It happens on the market. We have LLMs, but failing with the proper financial structure gives a lot of headaches and strategical issues on the market. And in this case, what is ledger? And the ledger is 3 statements, but that's a system that gives a proper visibility. It's a double entry ledger. Every movement should be booked twice against a named account, customer, fee, float, provider, and suspense. And there are only things that cannot be, I would say, rented from other companies. That's the heart of your system. As DashDevs, we have pretty interesting experience building the ledgers for our clients, and we accumulated experience and we provided the ledger system as a Fintech core product. So instead of going and relying on the third-party platforms like for banking rails or some wallet systems to understand where the client's money are, you need to do actually the heart of your system, which is ledger with the double entry. That will save you a lot of time. It will save a lot of sleepless nights for your ops teams, and I think it's essential here. If we go in details, balance sheet, that's what you hold and what you own. That's clear for clients. Whatever they see in the wallets and mobile applications or customer-facing apps, that's basically the balance. P&L, that's something that spread the earned minus rail and network fees. So basically, that's a book that gives you a really detailed understanding what is generated by the system, even if the cash flow is not there. So good example here, if we basically expecting the acquiring money in, it's already in P&L. So we factor that the customer topped up the account for $100 and it's going through the conversion, and then you're getting some cryptocurrency as a on ramp. But the P&L shows that there is $100 there, and cash flow, it's still not with you because your partner might be settled in T0 or T1 or T2. So when the money, physical money from your acquirer will come to your system, it will be the cash flow, but your ledger mainly is working with the P&L. And as a result of P&L work and cash flow, you see the real balance sheet. And when you design in the state machine of the system, I think it's really important to go into specific details of those 5 processes, because every timeout should be having an owner in the system. And quotation, it's straightforward. You are quoting, you are expiring. Recently, for example, we had a discussion that sometimes for the quotation and for understanding the pricing, you might use the third-party rate for the payer conversion. But it's not enough for that, because if you're reading, I don't know, from CoinGecko, the payers, and from any other source, there is a risk that you will be reading the rates that your system is not sustainable with. And quotation, even though it's pretty straightforward process for expiration, it should be properly designed for financial standpoint, because your quotation should be generating the margin. And as I explained, should be a slippage if it's executed with another rate. The second step is awaiting the funds. It's critical one, If funds are not coming within the specific timing, that should be canceled. So your state machine for the operation should support that. And the next step is clearing the funds. It means that we run against all the required checks. We do the proper allocation of the resources. And if the funds are not cleared, the owner for this process is compliance team, and they should go through the checks, additional checks, asking additional information about the funds, and clearing or reversing or even blocking the account. And that's accountability of the compliance team here. Execution, that once again, that might be really understandable process. We exchanging, we're doing the FX from the fiat to the crypto. But once again, if the execution is failing for some reason, refund owned. And once again, the system is built that you might receive from one account, and then you need to know where the fiat should go back. That creates an additional hurdle for the ops team. So this, once again, should be properly explained in use cases, should be properly designed in tech requirements, and it starts with understanding how your business works rather than developers will figure out, because then you will have some abandoned cases, the money will be taken, they will be deducted from the balance sheet and P&L, but nothing will happen and money will not land on outbound legs. So here, execution is really important, once again, connected with the business. And the last one, settlement. Sometimes it can be reversed, but we will discuss today the cases when it's done. So the final one is settlement, and once again, who is accountable for the reversing. Let's take a look on the parties that are involved in fiat in. It's 4 parties, and there is one irreversible step. Since we take in the fiat, the user accept the quotes, so we properly generated the quotation, the expiration is within a specific window, and the user accepted. So we lock in the price, we open the order, then there is a transfer happening through the card, on banking transfer. It really depends on your business model. What we do, we screen and hold those funds. Then the bank and PSP authorize and then clears, and then we execute the trade. So the platform here working perfectly as orchestrator because it takes the actions from the user. It also works with the banking rails, PSP rails. Execute the trade. It might be with the internal platform or with the, let's say, with the external liquidity providers. And then we update our ledger. And at this stage, it still can be reversed because there are chargebacks and actions like that. When we confirm that the conversion is done, first thing we are writing the ledger, we are writing the entries, and then we're executing. And when we send into the crypto assets or blockchain, it's after that it becomes irreversible because we cannot go back and do anything. Assets in, the hard part is actually the payout. So the user sent the assets to deposit address. We are waiting for end confirmations. That's once again is really thin but important moment, because in blockchain there are attacks which are setting up the fake nodes and they generating fake confirmations. So the attack exists. That's why you need to consider the way how you properly read in the confirmations. And then you, after those confirmations, you attribute deposit to the user. You screen the source of funds. AML should be, and KYT should be done at this stage. As Dima said, sums up, it's a partner of DashDevs. They are not financing us, but it's worth to mention them. They have the mechanism to check the crypto transactions and fiat transactions. We can use them here. And then we sell those assets and we fill the books. And on the last step, we instruct the payout once. It's really important. Once again, sometimes is underestimated why it leads to financial problems. And then we settles and the fiat lands on user account. It might be the internal system and then the payout, manual payout for the customer is available, or we are basically using the rails to send, like in this example, and then it lands on the customer banking account. And idempotency, that's really important topic. It exists in API. If you take a look any production and large scale system, they have all those idempotency keys, and usually it's client generated key. The caller owns the key and the server owns the outcome forever. That's exactly one-sided effect. Write the intent and then act, never act and then write, because in this case, there are fail cases and you cannot do anything about this. And webhooks, at least once, there are strategies how to work with the webhooks, to work with the duplications and out of order delivery. But what is important here, the recovery rate on duplicate crypto payouts are zero. There is no production cases when your duplications in crypto can be reversed. So whatever is pushed to the blockchain, it's executed, done, forgot. So there is no chargebacks on confirmed transactions. Control has to be upstream. And there are three sources of truth. And I really like this idea of source of truth in the financial and data systems. You need to understand what it is. So basically, you have your ledger, which is your source of truth, because you know what you told to the customer. That's a balances for understanding what happened in your system. That includes P&L, cash flow. There are information from providers as statements, rails, what was late, what netted, and differently routed. And there is a harsh reality, the bank and the chains. So where the money and cash flow physically is, this one always wins. So the system and the communication between those three should be built the way that you have a proper understanding and proper visibility of what is happening. And really important aspect about the customers, because we tend to think when we onboard the customer, we proper do the KYC, KYB for the business. That's a Boolean status, like it's binary. So either you verified or not, but for real, the verification expires and there are trigger events. And once again, in a modern system, you have an ability to put on ongoing monitoring the customers. So your system should be properly set for the updates of the status from verified to any others. So if we go through the usual process of registration, customer can abandon, that's good. There is no customer registered. When the KYC information is submitted, you can have the rejection. If the customer verified, it can do the re-KYC due. So the system should be built with the ability to set the date when the customer should be re-KYC'd. There are soft re-KYC, there are hard re-KYC. Also, the modern system, they support the tiering for the KYC, because if you provide more information about yourself, system might provide you better limits. And with on-ramp, it's really important because by having the system and providing, let's say, source of funds or source of wealth, you might get a better tiering and better limits per year. The markets that we work with, it's absolutely true in the European Union and United Kingdom. And if you take, you can see that having more information, you allow to do more transactional volume. And once again, there are fails like frozen or off-boarded customers that should be properly in your system. And every control has a latency. Once again, that sounds like the technical ability, but it's not, because I've seen a lot of cases when from engineering team, a specific control has no timing issue, but every process that requires additional checks, it's not automated. Like KYC. KYC might be done from your vendor in the seconds, but there are manual checks. It means that the moment that the KYC is collected and we receive the status from the vendor that, okay, all good, we collected all the required information, it's not instant. And with the KYC, I think on the market, it's already going there. But the process is KYT, it still should be properly designed that certain checks might be on hold more than seconds or even hours. Sometimes it takes days, and the system should be properly managing those transactions. With the KYB, it's clear, and sanctions screened per transaction, not once at sign up, and list change quickly. So your system should be able to work properly with the sanction screening. And travel rule, you need to check not just the beneficiary, but also the originator, because you have two directional flow, money flowing in, money flowing out. So it should be there. With on-ramp, it's a little bit easier because you have the same person on both sides. But once again, it should be properly structured as a travel rule, as a technical information. And the data must be traveling with the transfer, because in this case, you can keep whatever is changing. the use case that we had in productions, and it's pretty straightforward if you think, because we have customers who sometimes are changing their last names due to several reasons. And if you change it in original customer, that's good. You might have a history, but then the data that is traveling with your transactions changing, which is bringing hard to dig and detect issues with your ops team. Because if you will go back in history and the information about the first name and last name connected to the customer who changed, this might be different from your KYC process or push to vendor. So you should keep the data within the transfer to plan the data model for it. So once again, really important to stress that it should be properly designed. And as I already said, there is a difference between custody, because in crypto, and it's different from fiat, we have an ability to choose who is hosting or who holds the liability and the keys for signing the transactions. But the usual flow when you open in the bank, in digital bank, open an account in digital bank, your bank is holder or custody. They do the transactions on your behalf. You are not signing or not doing any digital fingerprint for signing the transaction. But it's different for crypto, because there are models and there are providers to work with non-custodial model. It means that the user hold the keys. And one of the example everyone I assume here knows MetaMask, and they provide in Web3 house, which allows you to integrate the SDK mobile application and work with non-custodial wallets, and the user will sign the transactions. We have in our case that's lighter, that's flexible, but it has a lot of difference in terms of licensing surface and safeguarding of clients' money, because client actually holds the funds and a lot of problems shifted on them, but it support that cost of those flows. And with the own custody, or when you hold in the custodial wallets with you, it's much better UX, because usually you're using your application and the key stored on the backend side. You have an instant internal transfer because it doesn't happen through the on-chain. Usually you can do the off-chain transaction there. So you should consider it really properly, because it's really hard to change from one model to another. And what we've seen with the going live, and since the process is orchestration, is really important to understand when you're developing with the sandboxes, because those vendors usually providing you an ability to test before going in production in simulated environments, which is called sandbox. You should ask those questions, because it's really important to understand how you will do the acceptance on the production and how the system will work in reality. So what is the real settlement time? Is it Friday afternoon? How it happens with your vendors, which are giving you an ability to do the sandbox integrations? Which failures the vendor is retrying for you, and whatever you need to do and detect? What is the machine readable statements? Because it's always in financial systems, it's important to work with the double checks. It's double entry for the ledger, is double checks against the machine readable statement. So it should be accommodated into the process. And the fourth question, who is on the other side of the trade? What happens if they stop? So you need to understand what is happening with the liquidity if you're using external liquidity providers. So it should be the part of the sandbox checks, like what are the contingency plans in our situation, and how do I leave? That's a question that I see rarely asked, because no one is thinking about leaving the vendors from the day one. But plan your strategy wisely, because if your system is properly designed and you know what exactly you need to do at the exit of the specific vendor before you sign the entry. So I cannot stress once again how it's important. And that's a high level understanding, but still the decision process. So you need to build the ledger and balance model. It's really important. As a DashDevs and FinTech core, we provide this ability to acquire the system from us. So you can a license from us and you can acquire sources and continue building yourself or with our help. So it's a build, but with the help of DashDevs. Transaction the state machine. As we saw today, the orchestration is really complex, and you need properly understand all the steps and all accountable parties for those executions. Another underestimated efforts is pricing and fee logic. It can be really complex. You have different ways of the flat fees, percentage, margins, slippage, stuff like that. So usually that's bread and butter for the company. So once again, it should be in your control and the customer facing flow, because right now it's really hard to compete. The market is flooded with the new applications and new wallets, ability to ramp in, ramp out. So the customer facing flow is usually that something that makes your business unique. And we really suggest to focus on user experience, not even UI, but user experience, because how straightforward and how well understandable the process is, it will influence your customer satisfaction. And there are things for integrate, that's KYC, KYB, KYT vendors. There are plenty of them on the market. They working well. Card acquiring and payouts, it's really hard to, I don't know, to lift all the requirements per specific market. So usually you go to the vendors there. Liquidity and NFX execution, we've seen a lot of businesses starting their business model with the third parties, and at some stage they're converting into own liquidity and own FX execution. But if you just enter in the market, that should be good way to integrate. And custody and key management, that's once again can be integrated at the first stage, but you need to understand what are the implications for that. And 5 things, or don't go live. Every transaction should be reconstructible from the ledger entries alone. And I've seen teams spending days and weeks to find out what was happening. And that's because it's not about their technical ability or technical ability of their tech team. It's because the requirements and understanding how financial system should be built was missing. So this is really important. If you can reconstruct on your development environment or quality assurance, it's a sign that something goes wrong, and it will definitely will go wrong in production. Every state has a timeout, an owner, and compensating actions. Every outbound instruction is independent and replay safe. Daily automation reconciliation against banks and chain, and a written answer where the customer's money are right now. Because if you need to spend efforts to understand that, that's something that should be fixed before going into the production. And on-ramp isn't the payment problem. It's orchestration problem. And today's software is really complex orchestration. So if you would like to hear more or learn from us, from our experience, you can contact us at DashDevs. You have the QR code to get more information. And thank you for joining us for those 2 presentations from me and Dima. And maybe someone have questions.
Yeah, I have a question. Is like, from your experience during on-ramp, what is the platform primary risk exposure during the on-ramp, workflow?
I think the biggest risk is to properly clear the fiat, because the system for building on-ramp is getting complex nowadays. You can use Omni accounts for collecting the funds, and sometimes the funds are landing on the same account, and then they referenced by the customer ID or the order number. And then first step, you need to understand who is sending the money and where they coming from, can be declared from IML and actions like that. So it's really important if you're using the banking rails. And the same goes with the cards and acquiring, because you need to match that the person who is topping up the account, it's the same person who is looking to get the funds out of the system, because the cost of the issue is really high. The transactions in blockchain, they're irreversible, and all the actions that are happening there with the fiat, it should be going through the proper compliance process from the business perspective and from the tech perspective. Getting all those 3 in the same time is really, really complex. So I think whatever is connected to the banking rails and acquiring requires special attention, not just from the tech team, but also from the product and compliance teams.
And anyways, everything we told today, we described today, it's really hard. It's not simple. It's a very complex topic, because you need to gather from different sides, from compliance, from legal, from product, from technical. But if you have a right team close to you, it'll be much easier to do, and it will just take time, of course, effort, and you'll do this. It's nothing is impossible. A lot of players on the market did already this, and we are here, me and Igor, we're ready to help. If you need a technical advising, a technical support, you can ping Igor for DashDevs. If you need compliance advice and support, you can ping me on NOVAFIN, because we have here at NOVAFIN quite a big experience in doing this. We can wrap up together with you interesting projects and interesting products, and can guide you through this complex set of questions and situations.
Thank you, everyone, for joining. It was a pleasure to discuss this topic and have pretty detailed information. We hope that it will be in great use for you, and we are looking forward you to see our news that we're doing weekly. Take a look on episodes with the guests that we releasing as a podcast, and maybe let's see you on other episodes of the webinars.
Thank you very much. Wishing you to have a nice time of the day when you're watching this. Thanks for those who watched us.